All right, if you're a business owner, you know you're always on the lookout for smart, tax-efficient strategies. Well, today, we're diving into a really powerful one that, honestly, a lot of people miss out on. We're talking about how to pay family members for their help, shift income, and save a ton on taxes.
So let me just ask you this straight up. What if you could pay a family member, get a huge tax deduction for it, and do it all with zero payroll tax? Yeah, I know, it sounds a little too good to be true, right? But it is absolutely possible, and we're about to break down exactly how you can pull it off.
Now, you've probably heard of the classic strategy of hiring your kids. And look, it's great for sole proprietors with kids under 18 because you can avoid certain payroll taxes. But what happens if you're an S Corp or a C Corp? Or what if your kids are over 18? Well, that's when payroll taxes usually crash the party. And this is where what I call the one-time project method comes in. It is a total game changer, especially for corporations and older family members, because the key here is it completely sidesteps both payroll and self-employment taxes.
Okay, enough with the theory. Let's get into a real-world scenario. Because abstract ideas are one thing, but seeing the actual dollars and cents, well, that's where this strategy really comes to life. Here it is, the bottom line. In this example, using this one strategy puts an extra $7,880 back in your family's pocket. That is pure savings. That's money that stays with you instead of going to the IRS. So the big question is, how in the world do we get to that number?
Let's walk through it. First, you pay your child, let's say they're 20, with no other income, $23,225 for a legitimate one-time project. Because it's a real business expense, you get to deduct that entire amount from your business income. Now, if you're in the top 37% tax bracket, that deduction alone saves you $8,593. Awesome. But what about your child? Well, thanks to the standard deduction, their taxable income is way lower, and they end up owing only about $713 in federal income tax. So you take your huge savings, subtract their tiny tax bill, and boom, the family as a whole is ahead by $7,880. So what is the magic here? What makes this all work? Well, it all hinges on a really important legal distinction. The key isn't just that you hired a family member, it's how you classify the work they're doing. The entire secret is in that phrase, one-time project.
Okay, let's get a little technical for a second, but stick with me, because this is the core of the whole strategy. It all comes down to the legal definition of a trade or business. The IRS hits that kind of income with self-employment tax. But here's the thing. The Supreme Court has made it clear that for something to be a trade or business, it needs two things: continuity and regularity. If the work doesn't have those, it doesn't qualify. And that's our opening.
So here's how to think about it. On one hand, if the work is ongoing and regular, like weekly bookkeeping or answering the phones every afternoon, that's a trade or business. And that means self-employment taxes are going to apply. But on the other hand, if the work is sporadic, a one-time project with a clear start and a clear finish, it does not meet that definition. And if it's not a trade or business, there's no self-employment tax. Simple as that.
So you get the why. Now let's get into the really crucial part, the how. Look, this is a super powerful strategy, but it only works if you execute it perfectly. The details are absolutely everything. So what kind of project actually qualifies? Well, you want to think about things that have a definite endpoint. Building a new website for the company? Perfect. Creating a specific series of marketing videos for a new product launch? Great example. Even physical projects like painting the entire office or installing a bunch of new equipment, they fit the bill perfectly. None of these are continuous, ongoing jobs. They're projects.
And hey, don't just take my word for it. This isn't some clever theory I just cooked up. This approach is actually backed up by the tax court. In a case called Batok versus Commissioner, the court specifically ruled that a one-time job just wasn't continuous or regular, and because of that, it didn't rise to the level of a trade or business. Having a legal precedent like that gives this strategy a really solid foundation.
All right, listen up, because this part is non-negotiable. Your documentation has to be perfect. You really need to get these details right. On the don't side, avoid vague stuff like help around the office. Instead, have a written contract that's super specific, like paint exterior of office building. Don't pay weekly or hourly, that looks like a job. Pay a single lump sum when the project is done. Don't have them buy materials, the business should purchase everything. And you need proof. Take before and after photos of the work. And finally, you have to pay a fair market rate amount for the job. This is how you build a rock-solid defensible position if the IRS ever asks.
Okay,
I know we've covered a lot of ground, so let's just zoom out for a second and quickly recap the main benefits of structuring payments to your family this way.
So when you do this the right way, you get 3 huge wins. First, you get to avoid all the headaches and costs of putting your family member on the official payroll. Second, and this is a big one, they get to avoid that nasty 15.3% self-employment tax on everything they earn. And third, you achieve the holy grail of tax planning. You successfully shift income from your super high tax bracket way down to their much, much lower one. It's a win-win-win.
So, as we wrap this up, I want to leave you with a question to chew on. With a new season or a new quarter coming up, just think about your own business for a second. What's that one-time project that's been sitting on the back burner? You know, building that website, creating those marketing materials, finally painting the office. This could be the perfect opportunity to finally get it done, help out a family member, and lock in some pretty incredible tax savings in the process.